The Federal Reserve has just done a massive policy change. During their September meeting, they cut interest rates down 50 basis points. This shocked a lot of analysts. Analysts were thinking maybe a 25 basis point cut, maybe a 50. Senate Democrats were pushing for a 75 basis point cut, which is no surprise. And we'll talk about the political implications of this rate cut in a second here. But 50 basis points is no joke. Normally, when you see 50 basis point cuts, it means the Federal Reserve either, one, made a mistake, or two, is fearful. It's kind of like they're playing catch up, because normally Federal Reserve cuts in interest rates happen at 25 basis point increments. So why did they choose 50? Well, I'll tell you one thing. It's not because they were afraid of anything to come per se. So let's go into some of their details here. They looked at what informed their decisions. First off, they looked at real GDP projections. These projections are based on a multitude of models and also the opinions of the Federal Reserve Board of Governors. Okay, so they're expecting 2% GDP growth over the next 5 years. That's pretty good growth for a G7 fully industrialized modern economy. Way better than what Europe is doing right now. And in some instances, it's stable growth in a way that China is not so stable, which it's a good place for the United States to be in, to say the least. Okay, so it's not like they're fearful that the GDP isn't going to be growing fast enough over the next 5 years. If we look at change in the unemployment rate, this is where a little bit of the possible fear / the idea that they were behind the trend kind of stems from. We recently got some new jobs report data during the month of August and July, and we saw a lot of huge, massive job revisions, a reduction of like 800,000 jobs that we thought the United States added, but actually didn't end up adding. And I think the Federal Reserve saw that and realized, okay, wait a second, guys. We have two mandates. We have price stability, which is keeping inflation down, and we have full employment. It's a dual mandate. Now, over the last 4 years, because we've been in this inflationary spiral the last 3 years, we've had a Federal Reserve focused on solely the price stability and kind of not caring, I shouldn't say not caring, but not prioritizing full employment as much. And now, as we look at the inflation rate, we can see that inflation is in fact going down. We're now looking at inflation of around 2.2% year over year, with the Federal Reserve target being 2%. If this continues in this way, the Federal Reserve has basically done its job at restoring price stability. And now it's seeing this uptick in unemployment up to like 4.3, 4.2%. And it's saying, okay, this uptick happened. We need to respond somehow, some way. And we know just by looking at the historic Federal Reserve funds rates that a 5.3 or 5.5% so interest rate is actually very high for modern standards. Recall back since the 2008 financial crash, the federal funds rate was around 0% for years as we were trying to spur economic activity. And so now the Federal Reserve is saying, okay, we are going to now decrease interest rates over a specific rate of time to now encourage full employment. Jerome Powell does make a key point here, though. He's not worried about the labor market. And I agree with that. I'm not worried about the labor market either. And neither should you. The fact that we are sitting at a 4.3% unemployment rate with projections of 4.3% going forward 5 years from now is an amazing feat of the American economy. There are not many other economies in the world that have such great employment statistics and growth statistics and inflation statistics. We're kind of unique in this sense right now. And this unemployment, I want to put this unemployment rate in perspective. When we were coming out of the 2008 financial crash into the 2010s, into the 2012 election, we were looking at unemployment rates of 7, 6%. If we go back to the 2012 campaign with Romney versus Obama, Romney was saying, I'm going to get employment rate back down to 5%. Well, now we're living in a world where some people are complaining about a 4.3% unemployment rate. And in addition to this, we see the highest labor participation rate among working age Americans that we've had in recent memory. So there are great fundamental strengths happening inside of the United States right now. So I want to really emphasize that this basis point cut is not happening out of fear. What it's happening is it's trying to return to a sense of normalcy, because the Federal Reserve only really has one their main hammer is the inflation, is the interest rates to tackle any inflation or movement in prices. And you want to have a nice stable area where your interest rates are, so you can go up higher if inflation gets bad and go down lower if you need to spur economic growth. And during the 2008 to 2015 recovery, we saw interest rates near zero. And if we were to have another economic recession at that point, the Federal Reserve would have had nowhere to go. And that would have damaged any type of monetary policy response. So we can't go all the way back to zero anymore, but we also can't still be at 5, because what we're seeing is companies still need, and I shouldn't say still need, companies and specific industries that are highly capital intensive, like green energy, new manufacturing plants, stuff related to the CHIPS Act. These companies need money and they need capital to invest in these businesses to grow the American economy. And Jerome Powell and the rest of the Federal Reserve realizes, wait a second, the GDP is not in any danger of going too low. The unemployment rate is not in danger of falling through the floor, but we are losing out on possible economic activity, possible economic growth by not lowering interest rates now. And there's an opportunity cost to this. And so they're taking it head on and they decided to go with this 50 basis point cut. But I want to talk about how the Federal Reserve is now going to try to keep the interest rates away from that 0% number that we saw for such a long time preceding this. If we look at the mid-range targets of where each of the Federal Reserve officials project the interest rates will be going into the future, we can see interest rates hovering at around 3% in the long run and taking about 4 or 5 years or so to get there. That's historically much higher than where it has been in the past. When we go back to even 2019, when Donald Trump was president and before COVID happened, interest rates were at 2.5%. Federal Reserve Board of Governors doesn't even think, the Federal Reserve officials don't even think that we're going to get back to that 2.5% number 5 years from now. And I think it's them preparing themselves or leaving themselves more ammunition for a future recession that may be coming. So that is all the economic indicators. Obviously, the stock market loved this. The S&P 500 hit all-time record highs. The Dow Jones hit intraday highs as of today. And I think that the rest of the economic sectors are going to love this news. Specifically, any company, like I said, is going to be required, needs high upfront capital in order to start their business. So all those things are very, very responding happily. People who aren't responding happily, Republicans. Conservatives and Republicans running for office are frankly furious at the Federal Reserve because they are angry that Kamala Harris and the Biden administration is going to be able to tout this win for themselves and be able to say, oh, look, our economic recovery has been so effective that now we are seeing lower interest rates. And what does lower interest rates do for a consumer like you and me? Well, it makes financing a car cheaper. It makes our credit cards cheaper. It's going to make our home mortgage loans cheaper. So all of those things it's going to directly impact your life. And if we continue to see 25 basis point cuts into the next couple of months, you're going to start feeling that. It's not rapid, doesn't happen right away, but the message and the vibes of the stock market, of business executives, of the news shows that people are going to watch are going to be positive. And Republicans don't want that to happen in the middle of an election year. During a Fox News interview with a Federal Reserve official, the Fox News anchor asked the Federal Reserve official, do you think it's too political to cut interest rates right now, even if it may be the right thing to do? Should we wait off until after the election? And the Federal Reserve official was like, no, to be frank, no. It may come off as political, but that's a shame. And it is a shame because the Federal Reserve is solely outside of our political operation as it should be. It is left, these decisions are getting left up to experts in the field, being with decisions that are driven by data. And it's not up to partisan actors or partisan politics to determine Federal Reserve policy. Biden has been explicitly clear on this, that he wanted nothing to do with telling the Federal Reserve what to do. None of that. He didn't want to influence it. Let the Federal Reserve do what it's got to do. And I appreciate that as someone who cares about the independence of a lot of these federal agencies or / the independence agency status of the Federal Reserve, because it's not technically a part of the government, but that's a whole other conversation. Donald Trump, on the other hand, doesn't believe in Federal Reserve independence. As you know, if you watched this show last month, Donald Trump during one of his speeches said that he thinks that he should be able to dictate interest rate policy and appoint people to the Federal Reserve who are directly going to listen to him. He said explicitly in one of his speeches that he knows more than a lot of the Federal Reserve officials, and he thinks he would do a better job of running the show. That's a huge danger to the entire concept of central banking and monetary policy. You can imagine a terrible nightmare where politicians are lowering interest rates right before an election just to boost up their poll numbers and go after those good vibes I was talking about. Well, let's zoom out again. Republicans are not happy about this 50 basis point cut, and they're calling foul. It's kind of fallen on deaf ears. I think a lot of people recognize that this is just the Federal Reserve doing its thing. There aren't many actually I shouldn't say that. There aren't any serious political commentators that are suggesting that Jerome Powell is in the pocket of the Democrats. The man was appointed by Donald Trump and then reappointed by Biden. So no, there's no malfeasance here, but obviously conservatives have to complain about something because it's in their DNA. Who knows? So we'll see what happens with the rest of this economic news going forward. I think the Federal Reserve is going to be really watching, obviously, the next jobs report over the next month, the next inflation report over the next month, and then we'll see in the month of October if they decide to cut rates again by 25 basis points.
So, we have a Patreon. And since you made it to the end of the episode, that means that maybe you are somewhat interested in the content we make, which, let me say, that's awesome.
That's so cool that you think that we have good takes enough for you to watch our stuff. That means a lot.
Thank you so much. You're probably wrong, but we'll take it. If you want to support the show, and we post exclusive content on there, so if you want to see more of that, see us go deeper onto a few other topics. Maybe some of the stuff we post on there is stuff that we think the normies on YouTube might be a little bit less interested in, but the nerds that want to go to Patreon are more interested in. Feel free to check it out. There's going to be a link in the video description. There's a link in the channel description as well.
Perfect.
We would super appreciate it.
Love you guys.